And I'm asking these recordings to be put in the Dropbox so you can see them or share with others who are not on this live Zoom. But the knowledge is just pouring in through this little experiment. And so all of you, please take full advantage. And with that, Gregory Webb, thank you for being here today. And we look forward to learning from you.
It was my pleasure. I'm going to talk just on one aspect of using tools to help screen stocks that I use. It's more of a preliminary screener, and it's Yahoo Finance. For the last 5 years, I've been working with students at Milwaukee Public School, Bethune Academy, 7th and 8th graders, and helping them use this tool to be able to pick stocks. We've had 20 teams each year of students, of 5 to 6 students, 7th and 8th graders, that have been able to successfully pick stocks that, and they have a competition. And whoever wins the competition, the top 5 teams get cash prizes. The prizes really come from them giving me good stock tips that I've been able to invest in and give them a fraction of the earnings that I get. So it's a win-win situation. I'm excited about it because some of these students will use those tools in the future and hopefully be investors and take control over their destiny more so. And again, we've been doing it for 5 years and we kind of refined it. So I'm going to spend some time talking about the things that I'll look at Yahoo Finance very briefly and be able to answer any questions that you may have. So I'm going to try and use technology for the first time to do a share screen. And I took some photos of, let me get some more, one bunch of these. Let me go back. I apologize because it's the first time I'm doing it. I need to know how to do this for the future.
Did you want to do share screen?
Yes,
you
I
see
gave
the screen now?
He has
okay.
it, yep.
We're going to start off with one stock that everybody knows about, Amazon. And the reason why I picked Amazon, back when I started teaching the students 5 years ago, Amazon was about $500 a share. I didn't know anything about it, didn't pay much attention to it, but they brought it to my attention. As you see, it's at $2,700 per share. And I owe this to the students doing their analysis and being able to pick out a stock. So this is a normal page. You put a ticker symbol in and you get a stock, like Amazon, for example. I'm gonna highlight what I look at. And again, if it's okay, you can ask questions and interrupt. Just make sure before I go on to the next slide. Normally I'm looking at highlight a year-to-date trend to see what's going on, to see if we're going in the positive direction or a negative direction. As you can see here, I highlighted year-to-date trend, and the stock has done phenomenally over the year. It went down when we had that crash back in March, down to below $1,600 a share, and shot up. Now, don't be scared by the price of a stock. It's basically the percentage change that really matters, because now you can buy fractional shares of stock with Schwab and Fidelity and everybody else, T-Trade. You can go ahead, if you want to spend $500 on a stock, they'll give you a proportionate share, and you'll have the same return on investment if you bought the whole share. So I just picked this one as an example because this has been very, very positive. It's gone from $1,000, as you can see, $1,600 to $2,700. To me, that's a good trend. If the trend was going in the opposite direction, I probably would not be looking at that stock any further. First step, I want to go in a positive direction and see how it's done. If I look at over a longer period of time, I could pick a 5-year or a longer period, and you would see it go from $500 a share up to $2,700 a share. The other thing I'm looking at is the target, the estimated price target. The bottom of the screen highlighted, 1-year target estimate. It's circled, it's 2,700. Now, this was done by a bunch of experts, and I'll show you that on a future slide.
Greg, I just want to point out, you can use your cursor, and that might help guide their eyes to wherever you are talking.
Well, I'm on an iPad, so I don't have a cursor.
Okay. Okay.
Yeah.
All right. Well, you can just describe where it is then.
Yeah.
Right.
It's highlighted in the lower left, the 2753. In this situation, there are several analysts from various companies that pick the 12-year target. They expect the price of the stock to be at 2,700. What's happened now is we already run up to that stock. So if I was trying to get into that stock right now, I probably wouldn't, because it's already appreciated from 1,600 and 1,800 up to 2,700. So it's kind of run its course for what I'm looking for. But back when they gave those estimates, the stock was less than $2,000 a share. So it was a lot of good opportunity there that I thought. The other thing, let's see if I can turn on my, turn on this. There we go, pen. I'm trying to use my fancy Apple pen, which I use some of the props from Apple to buy some of these toys I'm still trying to learn how to use. Another thing I look at is the beta. Does anybody know what a beta is? Is anybody there? Bob?
Yep, we're here.
Okay. No one knows what a beta? Well, beta is by definition the risk. The risk profile. A beta of 1 means it goes with the market. A beta of 2 means the stock moves twice as fast as the market. A beta of less than 1 means it loses. I use it as a definition of risk. If I want a high return, I want higher risk. And I'm willing to take on risk, so I'll look at the beta, that 1.32 that's there, that's been circled. So if I'm really a chicken and I want to pick a strong stock that has a long-term stability, I'll pick a stock that has a beta of 1 or less, as opposed to 1.32 there. The other thing I'm looking at is EPS, earnings per share. Most investors want positive, profitable companies, and the higher the EPS, earning per share, the better it is. So I'm looking for a strong EPS. One of the items I'm circling here is the earnings date. Let's give me a better color. This is not highlighting well. But the earnings date, the example being in this situation, the earnings happen around the 23rd to the 27th of next month. Today, one of our stocks we have is Nike. Nike's earnings were today. As we were waiting for this call, they came out with earnings. So I bought a bunch of Nike in advance of the earnings, thinking it was going to be good news. Regrettably, the news was not good. And I lost $3 a share just by getting in front of the earnings release. So it's good to know what's going on with the earnings release and what you think is going to happen with profitability going forward. So that's the first page. That's the summary page. It gives you a good snapshot to see if you want to dig deeper. The next one is look into, let's see, how do I make this move? I don't know how to make it move. To the next page.
Greg, normally you have to actually stop share screen. And then you have to identify which one you want next, and then go back to share screen. That's the only way I know how to do it.
Okay. I thought I could do a bunch. Okay. This is the same stock. Instead of just looking at the summary, which is highlighted here, I go into details to dig a little bit deeper. The stock has passed my first screen, that I want to learn more about it and see what's going on. So I start looking at the trend in earnings, the revenues. That's a good trend. I like going up in earnings, even though, revenues, the green. The earnings are not spectacular, but they're headed in the right direction. They're a gigantic company, as you know, and they make more money on volume with very, very small profitability, but they're on a trend where they're dominating the market, taking market share. We talked about that target price that was $27.53. I'm going to look at that to the analyst recommendation. What it tells me here is 46 analysts from all over have given a recommendation on the stock. So I feel a lot of people are looking at the stock, and it gives me a high degree of confidence that there's a lot of good information out there, as opposed to some stocks you'll look at, you won't find any recommendations, or you just find a couple of people. So we start looking at that to see how the recommendation, this is a buy, 1.75, 1 being the highest.
They're different numbers.
Right here, under analyst recommendations.
Young people, do you have a question, or do you need them to slow down at all?
I think they was just unmuted by accident, Bob.
Oh, okay. All right. Carry on, Greg.
So we're looking on that
Hi,
chart
Bob.
there.
Hi.
1 second. So we got a request from one of our youth at New Life to slow down just a little bit.
Okay. Well, I only had 12 minutes, so I was trying to get it all in. So
Well,
I'll slow down.
We'll give you a few more minutes, Greg.
Okay.
But you're
Okay.
speaking to exactly what they're going to be using, which is Yahoo. So thank you.
Okay. So the analyst recommendations, this area right here that I really messed up with my pen, underneath the bar chart. We're looking for items that are recommended as a buy or a strong buy, either a 2 or a 1. I may hold on to what I have as a 3. I would definitely think about getting rid of a 4 or a 5, because those are based on what the analysts, who are supposedly experienced individuals, have done a lot of research on the stock, recommend that you buy, sell, or hold. This has a decent number of 1.7. And again, some of this information is dated. The analyst stuff, we're going to look a little bit later on. Some are old. Like they may have, these recommendations may have occurred during the first part of the year, and the stock has already run up, and they may be dated. So you need to look and see, and we'll show that shortly, when the recommendations were presented and when they're captured here. So this is a good looking at, if you drill down in details. It's a profitable company by the arrow of revenues going up. Earnings are positive. People are recommending to buy the stock at this point in time. It has a price target of that 2,700, which we've already reached, which may say, okay, it was a good investment when I bought into the stock. It may not be such a good investment going forward. I'm going to show you in the next slide. They come out quarterly, recommendations for individuals. Let's see if I can go to the next one. Got to stop. Screen share, go back to here. And which one of these? Let's do that one. And okay, we're talking about the recommendations. You can see the detail, the same information we had before to get to that 1.7. Over time, from June, the most recent one, back to March. Back in March, somebody was saying sell that stock. You see a little red there on the bar chart for March. Let's get my pen working. There we go. Right here. So that's dated information, but every quarter, you're starting to look at the information. The latest information is for June, which says of the people, the 47 people, 28 are saying buy the stock, 15 are saying really strongly buy the stock. So the trend, and look how it's changed over time. Before, there was 12 strong buys back in March, and now there are 15. So people are getting more bullish. There were 18 strong buys in May. So looking at that trend, you ask how often people come on and look down at the bottom, upgrades and downgrades. Baird, down below here, gave a recommendation on the 8th of the month. They're pretty bullish. They're pretty optimistic, outperform. RBC Capital on the same date said outperform. Morgan Stanley on the 1st of June, overweight rather. Those are all positive. So there's a lot of optimism on the stock recently. Even though the stock has run up to 2,700, these analysts think there's more room to run. And what will probably happen is that price target, that's 2,700, I expect it to go up over time. If they were bearish about it, if they were concerned, they would be saying sell or hold, depending on but these are the 46 individuals that I'm looking at to give me some credibility or give me a little more confidence that I'm making a good investment decision. And this is also, if you drill down from the graph we saw before to this one. Any questions about this page? Another item, look at the price range in the middle. The average right now target is 27.53. The current price, when I ran this on Tuesday, was 27.64, right in the middle of the page. It's already hit that. The low estimate was 21.62, and somebody thinks it's going to go up to 3,400. One of these analysts thinks it's going to go up to 3,400. So you can see the range of thoughts about this. The lowest price, 21, we're pretty much at the consensus target of 2,700, and someone has a high target saying it's going to go up to 3,400. So that's what the value is added by getting free information from all these analysts to help reinforce your decision making when you try and determine whether the stock is something that you want to participate in or not. Let's see, I have a couple of more slides. Slides, photos. Let's see, which one was that? That one was that. Oh, that's the beginning one. Oh, really? Now they're all here. Okay, good. That's one and marked up. Okay, here's one that Bob likes to look at. Can you see the slide? Is it showing up?
No, are you sharing? What you
Oh,
have to do is highlight that screen. There you go.
Okay. This is one that has the financial information, the kind of information, some of what you see normally in Value Line or other places, what's happening over time with their expenses, their income, what trends are occurring there, their EPS, their EBITDA. And you kind of, I like looking at the earnings to see how they have performed against what the estimates are. Example being in second quarter last year, they came in below. That's the red dot compared to the white dot in the graph, an earnings graph there. They missed again in third quarter. As you can see, fourth quarter, they blew it out of the water, out of the ballpark. Mm. They far exceeded expectations there. And they beat by a whole lot. They beat by $2.44. You can kind of correlate when they do stuff like that, what happens to the stock. That's why the earnings release is very important. If people have unexpectedly good news, the stock will really take off after the earnings release for a period of time. Now, fast forward to the first quarter of 2020, again, they missed. But the stock is still, it's been thriving because of COVID-19 and the information behind that. People are still investing. Everybody's getting Amazon packages right now. Again, looking at the more of the financial information here, this kind of like, this is one of the pictures I want to look at and see what the trend, what direction they're headed. And the other part of looking at the news in Value Line, there's, excuse me, in Yahoo Finance, there's some news that's available for you to look at also, because that's going to drive the stock. It's based on good news and bad news. In the short term, it's going to drive the stock. I think I have one more and I'm done with the graphs. Let's see. I think, what is that one? Nope, not that one. Not that one. Not that one.
While you're looking for that one, I'll just say Alice Pugh has quite the little page recognizing her.
It changes, Bob. I never know what picture is going to pop up.
Oh, yeah. Yeah. I didn't get to see that. This is the last slide. Looking at historical information over a long period of time, the stock going back a few years when it was like $500 a share up to where it is right now. You'll see a lot of jaggeds. I want to also see who's holding the stock, because sometimes I'm looking at to see, obviously, Bezos is a big stockholder, the richest man on the planet. I look to see, I take note of who owns the stock, and also get things sent from me from Fidelity and other people when they start selling their stock, because it has a big impact when insiders start moving the stock around. So a lot of the information I get starting off here, I rely on more detailed sources. I use Fidelity, Stock Pro to get information, to have alerts sent to me, and so I can evaluate what's going on if things change. Also looking at, which I'm going to get into, options, puts and calls. What are people doing out there with the stock? Because they have a big impact on the short-term fluctuation. But there's a lot of information if you start tapping onto the detail of Yahoo, as opposed to just looking at the summary page. You can dig deeper and get a lot of the information that's very timely and help you screen out stocks or also evaluate your investments going forward. So the most important things are the range, the EPS that I find that I get from here, the beta for the risk, the target price to see where I am right now to the target price, and finding out what the analysts are going to tell me in the way of it. Should I buy, sell, or hold this particular stock? So all that's out there free and very easy to look at. And after I have all these, I put them in my Yahoo portfolio and go back and look and see how we're performing, or I have alerts sent to me. So I can use that, and the students have used it very, very well. The students that they only used the Yahoo Finance as their screening tool, they were up 20% during the last semester. Each of the top 10 class teams went from $5,000 and turned into over $6,000 over the course of 3 months. So they were doing a great job of picking stocks. There was only one team that managed to lose money, and they just didn't pay attention, and they really didn't pick their stocks wisely. But all the other teams made money, and the top 10 teams were up over 20%.
Greg, can you relinquish your screen? And I'm going to try to go live into Yahoo, because it's always fun when you talk through just a live page. And now I got to see if I can share my screen.
Okay.
Screen. Okay, go back to Yahoo, then go to share screen. And then I'm going to try to do this one. So right now I have up Amazon, because you had talked about that. But I'm wondering about Nike. That's just something I think across the board everybody likes. MKE, is that right?
That's right.
Yeah. And all right, folks. So here we have Nike, and Greg did a wonderful job and was very thorough on it. But Greg, from the perspective of these individuals just learning, they don't really need the details. So let's give us the 5 key things, and I'll use my cursor as you walk us through just 5 things you like to know about a stock when you're thinking about buying it. Based on, this is Yahoo Finance.
Okay. First thing I want to look at is what's the 52-week range.
Okay, so help me. I'm going to find it, folks. All
You're right there, right there. So what's been happening over the last year? What was the lowest price for the stock? What was the highest price? And how does that relate to the current price? Kind of tells you where you are in the game with timing. It was $60 a share at the lowest point. It was 105 at the highest point, and we're at 107. We're at 98 right now.
That's right.
I bought some, as I told you, I bought a bunch at 100, and I lost $3.30 a share because I was expecting the news to pop, because I like Nike like everyone else, and I expected them to come out strong, and right now it went the opposite way. So the earnings release date is important to know because it's going to have an impact. The range, again, 52-week range compared to the current price, kind of give you an idea of what where you are. The second most important thing is the target price. That target price of 142 from the analysts. I don't know how many analysts they have right here, but that stock, that kind of says with the expert. They expect the price over the next 12 months to be at $100 a share, which means there's not a lot of upside opportunity here. To me, it probably was when it was $60 a share, because you could go up $40 a share from its low, but right now it's hovering right around $100 a share. So we don't expect it to go up to 110 or 115. These are the experts. They're saying, the other thing they're saying, look over here to the right of that. The little, to the left. I'm challenged. Overvalued, down below the little chart there. Basically, they're telling the stock value is pretty high right now. You want that to be in the yellow or the green based on your timing right now to buy the stock. At one point in time when it was $60 a share, I assure you that it was not overvalued then. It was probably undervalued, and that was a good time to buy the stock and hold it for a long time. Right now, you'd be buying it at a premium by the overvalue. That's what I'm telling you. You're paying $100 a share for a stock, unless you're doing like me. I was going to play on the earnings release. Didn't buy a lot of it because I wasn't had a strong conviction on it. But unless you, and it tells you when the earnings release date are. There it is, the 25th of June. So you know that in advance. That's why I bought it today, because I knew it was going to come out. So looking at what we pay. Excuse me.
You're saying the earnings are reported quarterly. That's every
Yeah.
3 months.
Mhm.
And I'm looking for that earnings release date. Where is it?
Just 3 lines above the target estimate price. June 25th. There
Oh,
you go.
got it right there. Okay.
Yeah.
So that's today. You're right. That's today.
So it's going to always be there because it's important. They put all the important information on the summary page. It sort of gives you the first, everything on this page has some value as doing your screen.
Mm-hmm.
Because if it wasn't profitable,
Mm-hmm.
I wouldn't buy it. If it was a small capitalized company, I wouldn't buy it.
Mm-hmm.
It has a 1% dividend. That's good. That was just below the dividend is 98 cents. It's $100 a share, so 1% dividend, round numbers. I like dividend stocks because they usually mean they're strong and they're profitable, as opposed to non-dividend stocks. Although let me talk about Amazon. They don't pay a dividend and they're very profitable because they're keeping the money to reinvest.
Let's walk through these 3 items right here. This is just things that they should know by the time we finish in August.
Okay.
Market capitalization. Do you want to talk about that, or I will, whichever?
Well, that's simply the number of shares outstanding times the current stock price.
Right. So
changes every day.
Yeah. So individuals, when you're looking at what is the real stock value of that company, you'll see this number right here. And it's telling you that if you multiplied all of the shares of stock that are outstanding, this is just a number that traded today. So it's a bunch of shares outstanding. And you multiply that times the stock price, it's going to give you the market capitalization, the overall stock value of that company. In this case, it's in billions. So the market capitalization, we say it's for short, market cap is $157 billion, 668 million. So it's big. Greg had already talked about the beta. That's just telling you how fast does this stock price move compared to the overall market. And in this case, it's lower than 1. So this isn't fluctuating as much as the market as a whole. If this number was higher than 1, then you'd have a company that might really be moving. Greg, this is the stock market game, short term. What would you say about the kids should be looking at the beta here? Would you think they want to have fun with low betas or high betas, given that they're trying to win this game?
High betas win all the time, except when the market is volatile and in a downward, because you're going to lose more. You can win more, but you can lose more. It depends on what happens in the market. I am a high beta person because I want to own certain things.
And high beta, he's looking for higher than 1.
Oh, definitely. I'm looking at betas of 1.5 to 2.
Okay.
Which means I can go up twice as fast, but also go down twice as fast.
Right. So for you guys' strategy, look at the beta. And if you're really looking for a stock to move and move, you think the market is positive going up, you want a high beta. If you think the market is kind of negative, or you think this stock has a chance to go down and it has a high beta, then look for the stock to go down. And then again, we're going to have someone talk a little bit more about the price earnings ratio, but these are 2 very important indicators of a stock, and you compare the 2. It's just the price per share divided by the earnings per share. You have the price per share here. You've got the earnings per share here. If you divide this price by this earnings, you get approximately this number. And so it's just telling you how much money are people willing to pay for a share of earnings per share. They're willing to pay 37 times the earnings per share in this case. You wouldn't expect to understand that 100%, but we just want you to know PE is an important thing to consider when purchasing a stock. And you want to be aware, is it a high PE or not a high PE? And again, it's based on the earnings per share compared to the stock price. Somebody earlier today told me that people's math improves when they get invested or interested in the stock market. And I can see now because it's just a little bit of arithmetic that takes you a long way in understanding stocks and being able to do some really good analysis. It's not complicated. 5th grade math is about all you need, but if you can at least do that 5th or 6th grade math, you're going to be able to really drill down on how stocks are doing. A lot of stuff here. I love visuals. And so here it's just showing you what the stock did today, one day. But the last 6 months have been an exciting ride. And now you click on 6 months and you'll see this stock went down. Oh, it would have been great to get it right around 65, 66. And now it's at 100. Well, what has the stock done in 5 years? You guys will only be about 20 years old in 5 years. And the stock just went up, up, up. And you can see it doesn't go up smoothly, but it has been a good company. So it's gone up gradually over time. So this is a nice chart. And then Greg always has fun down here. These are the screenshots that he had earlier. And it shows the earnings compared to predictions. It shows the quarterly earnings and revenue. And we'll talk a little bit about that terminology. And then this is, I don't know, Greg, if you would call it a cheat sheet, but it is an indicator of what other people think of Nike stock. And in this case, green is good, yellow is a hold, and red means some people think you ought to sell it. So overall, we've got a good green chart over here, and I'm gonna have to, I have an overlay, so I'm not seeing the whole thing. Now, in looking at this, overall, it's a buy rating. So those are the things I like for you guys to see, understand, and let's pause and see if there are any questions at this stage.
Bob, admit one into the room, and you can read Julie's comment in the chat. She had to leave, but wanted to remind everybody that registration closes on Monday, and she has she's available Monday through Thursday if anybody needs any technical assistance.
Okay, I'm glad you caught that. Thank you very much. Thank you. So again, I think all teams that we expected to register are registered by now. If any of the teams are having any logistical issues or questions, by all means, let us know. Greg, are there any other parting words that you would like to give these individuals? It looks like we have a good 20, I think about 23 people on, 21 on right now. But
that's great.
Yeah, it was a really nice session. And Greg, just any other parting words before we conclude?
No, it's just, this is just one of the many tools. You know, you shouldn't make your stock decisions based solely on what's here. It just gives you directional information so you can dig further to see if you want to make an investment.
Well, everyone, we want to thank Greg. I'll stop the share. And if you know how to send up a reaction, let's send him an applause, a thumbs up, or whatever we can, because Greg was really, really wonderful. And he gave me permission to list him as a resource person for anybody who would like additional information. So the advisors will get the follow-up to be able to contact him. Greg, you're getting a lot of applause and thumbs up.
Well, thank you. I enjoy sharing the information.
Yeah.
I'm excited when people take time to invest. That's what I like about the kids. You talked about math. At 7th and 8th grade, they know how to do all the math, and it makes it relevant. And when they win and make money, that gets them excited. And that's the whole idea behind it, is trying to people to increase their net worth over time.
Absolutely. And so I am going to stop